Token Arthur was always curious about new things. One day, while flying over the jungle, he saw a group of animals exchanging goods and services using colorful stones. So he contacted Fintech CTOs from fantastic companies all around the world and collaborated with them to learn all about finance. Inspired, Arthur asked RedStart CEO Vasyl to help start a podcast to share their knowledge with the world. This is what you are watching right now, Fintech CTO Podcast. Enjoy.
Hello, everyone. I'm Vasyl Soloshchuk, and this is our next episode of our Fintech CTO Podcast. And today we have our new guest from England, and his name is Adam Jones.
Meet Adam Jones, the Chief Technology Officer at Seccl and the Trustee of RedStart. Driven by a profound passion for innovation, technology, and financial inclusion, he spearheads the reset of the investment industry infrastructure. With unwavering dedication, Adam harnesses cutting-edge solutions to redefine how investments are managed and accessed. His visionary mindset and expertise in technology enable him to optimize processes, enhance efficiency, and revolutionize the investment experience. Moreover, he actively champions the cause of financial inclusion, striving to create opportunities for individuals from all backgrounds. Adam's remarkable leadership and unwavering commitment leave an indelible mark on the industry, shaping a more inclusive and innovative future.
So, Adam, hello.
Hello, nice to see you.
Yes, thank you. Thank you for joining our podcast. And to start, can you tell us a few words about yourself? Introduce yourself. What's your current role? What's your current company? What you do?
Sure. So lovely to meet everyone. I am Adam Jones. I'm the CTO of Seccl. Seccl are an investment technology company based in the UK who help people to invest and invest well. And I guess my role there is to look after product, engineering, data, IT ops. So everything to do with what are we going to build? How do we build it? Have we built the right thing? And did we build it well enough? All of that sits under my banner, if you like.
So what is the size of your current engineering team?
So the total size of the people I look after is about 65 at the moment, I believe, of which is probably about 45 are in engineering. Then we've got about 10 people in product, maybe 12, 13 people in product, and the remainder are in data and IT ops.
So why I ask this question is actually to set the perspective of the scale of the engineering team that you have, because in different companies with different size, the scope of role for CTO will be for sure pretty different. Okay. So, and you also mentioned the product. So is the product team under yourself?
Yes, it is. And appreciate that, as you say, CTO can be many, many different things, from, the smartest developer in the room all the way up to someone who runs, 500 people in an engineering function. At Seccl, we've brought product together with engineering under technology. So I'm a really strong believer in cross-functional teams and product being a contributor and engineering being a contributor. And I actually find that the separation of those things is not that helpful if you're trying to build a unified development process and you're trying to get the right thing to your customers. So we've brought them together and actually see a really strong basis of collaboration across both as a result of that change.
Mm-hmm. Okay, so does it mean that you don't have a chief product officer, or you do have?
Correct. So we don't have a chief product officer. So I am the chief technology officer, but also product, if you like. And then what we do have is we have a head of product, and we have a head of engineering, we have a head of data, and they all work for me. So that's kind of our technology setup, if you like. And then we also have IT ops and InfoSec, which sits in addition to that.
Mm-hmm. Mm-hmm. All right. So as I know, you joined Seccl actually pretty recently.
Yeah.
So can you tell us, please, why actually you selected Seccl? So what was interesting for you?
Yeah, sure. I mean, it's an interesting business. So for reference, the business was founded in 2016. but was acquired by Octopus in 2019. And its mission really is to change the way the investments industry works to better support clients and to give people better outcomes. And I suppose we believe that certainly technology in the investment space is pretty broken and it really needs focus. So there's a lack of innovation, there's a lack of pace, and really that's the problem we're trying to address. From a personal point of view, my background has been in various different investment and technology and fintech businesses over the past 10 years or so, and actually historically worked for someone who is now a competitor to Seccl. So I have a good understanding of the space, and I guess the mission that we were on was really, really exciting for me. I'd spent the last 5 years building a fintech business within an investment consultancy called Reddington. So going from pre-product, pre-revenue team of 4 up to kind of a team of 60 people, a distinct business, millions of pounds of revenue, and went on that whole journey, which was great. But I guess I wanted a new challenge, and Seccl brought that because the size of the aspiration, which is to transform an industry and to become a new infrastructure for an industry, was something that was just really exciting to me. And then to be able to grow a great team of people around that, and in a business that really understood that the product that you bring, the technology that you bring, is the real thing that's going to enable that change. It was a really exciting combination of things.
So does it mean that with Seccl you can influence the whole industry, because Seccl is actually a platform, an infrastructure platform? Is it correct?
Yeah, that's right. So what Seccl does is it is a technology product that also has operational services. So if you want to establish an investment offering in the UK, then you can use Seccl to provide a pension or an ISA, which are the kind of accounts, if you like, and you can use Seccl to connect to fund managers and to the stock market. So really what we're trying to do is make that connection of a retail customer and the financial markets a lot easier. We're trying to take out cost in that. We're trying to make it more efficient. So our customers tend to be financial advice businesses. It could be a bank, could be an investment manager, any kind of financial institution that wants to build a proposition to take to retail customers. So fintechs, for example, well, we can help them do that by taking away, frankly, a lot of the operational overhead and a lot of the administrative burden, and let them really focus on what they care about, which is the relationship with the client. It's the application that they're building. It's all of that. But because of this, because we see ourselves as, I guess, hero makers in that journey for all of these firms, if you like, our view is very much we are an infrastructure provider. We are the thing that will underpin the investments market of the future. So we want lots and lots of customers who serve lots of end clients as a way of delivering that.
Okay, so taking this into account, so can you please provide us maybe some example how Seccl's technology exactly has helped investment or advice firms to improve their services, their customer experience, and actually become more valuable?
Yeah, sure. So let's take an example of someone like GoHenry, who are a fintech based in the UK, who make children's savings products. They had a stocks and shares ISA proposition. They wanted to upgrade the technology that sat on to make that more scalable. So we started working with them as a client, went through a very quick process with them. So I think it was kind of over a few months period, went from meeting them to being live and to have the 35,000 client accounts set up, or whatever the number is, on the Seccl platform. And what that means is that they build in their app the customer journey and how it relates to other GoHenry products, and they own all of that client relationship. What we do is we look after the client money, which is the regulated aspect of client money in the background. We look after trading on their behalf. So we go and buy funds for their clients. We do the reconciliation work. And we do that through our technology. So we have a very small team of people, but a big technology capability. But what that means is that they're able to focus their attention on where they add value to their client journey. Similarly, if you look into the advice market, you look at a company like P1, who are based in the UK. They use our platform services and our technology offering to be able to offer their own platform to their client base and to use that to improve their advice journey, to safeguard their clients' assets, but again, allow them to focus on the relationship they have with clients or the way that they work with their partner firms. Really, what we're doing is we're taking away that burden and the operational overhead for the stuff that, for a lot of people, I think, frankly, isn't very exciting, but it's really important and it really needs to be done properly. That's really where we sit in, like the next generation of custodian, if you like, the next generation of infrastructure provider in this market.
So, for the success of what you're talking about, so I think also the Seccl's API first approach, should be an important factor. So can you please tell us, so how did the idea for Seccl's API first approach come about, and what has been the response actually from your clients about this?
Yeah, sure. And it's probably worth a bit of industry context, because I'm conscious that viewers will come from various different backgrounds. So the financial advice industry, or the investments industry, especially in the UK, is not one where there has been a lot of innovation. It's not one where there's been a lot of change. And we often talk about fintech as being innovation in a space that's not used to it. But I think, if you thought innovation in banking was slow over the past 20 years, look at the investment space, because it's significantly slower. And what that means is that lots of the existing propositions are powered by technology that is dated, it's legacy, it's old, and it's therefore quite hard to change, and it's quite slow to change, and it's quite costly. And I guess it's that thing of, running your software costs nothing, changing your software costs everything. And we work in an industry where the change cost is huge. So when Dave Harvey, who was our founder, when he sort of set up the business in 2016, he really wanted to challenge, how do we approach change? And we do that in two ways. One is through how we architect the system, and then the second is how we do an API first approach to delivery. So how we architect the system, we work on an approach called volatility-based decomposition, which is not that commonly known, but is, in short, a way of accepting that change will happen. So instead of designing a system and then having to deal with our change on it, we design a system that should be able to change, because the only thing we know is that we'll have to change it in the future, because stuff is going to happen. So that was a big thing. And that says, as part of what we do there, well, we have an architecture and a setup which allows us to change in the future and doesn't tie us down. We have a single code base, which means that all change is shared by all clients at any one time, unless they choose to opt out of it. And, we don't have this multiple versions of software that we're having to update, and we don't have any of that old school kind of having to manage clients through version paths. The second piece is the API first approach, which, as you say, is, just so we're on the same page, basically what we're saying is any functionality that we deliver through our API in addition to our UI, which means that for the superset of functionality, it's in the API. So there might be some stuff you can do in the API that you can't do in the UI, but there shouldn't be anything that you can do in the UI that you can't do in the API. And we did that because we have a genuine belief that over time, people won't want our UI, because they will build their own, because they will own that client journey. So if you look at the fintechs we work with, they don't want our client-facing UI. They can have it. We have one and it's available, but they want their own, because they want to own that client relationship. And it's our strong belief that over the next few years, people stop using our API, they build their own they stop using our own UI, they build their own front end, and they interact with our API, and therefore all of our services have to be available through that. Now, the slight caveat to that is building your own UI is hard, especially if you're not used to doing that level of change. So while some firms are already just using us for an API service, they don't take a UI, they do everything through the API. Others actually find it easier to get to market by taking our UI, and that's absolutely fine. And we're actually just about to go through a program of work refreshing our UI and offering that to all of our clients because we think it has to be of a good enough level to support them. But it's our strong belief that actually our client firms want to own their journey in the long term anyway. So if we were here talking in 5 years' time, I sort of feel like we wouldn't really be using our UI, and that's fine because that's how we've designed the platform and the business.
So it looks like two different strategies, yeah, like to have this solid UI and build all in one solution. And we have seen this approach on the market, or to develop really solid APIs and maybe not so focused on UI development, but provide the whole infrastructure so your clients can integrate with yourself. Okay, so you provide the infrastructure, and as you said, your clients want to own the relationship with the end clients. So, but you have both strategies right now. So, so what is the decision behind being an infrastructure platform rather than all-in-one solution? Because to me it looks like you're not going to be like all-in-one solution and own the relations of with the end clients, with all the end clients, but to provide the infrastructure. So what was the like a business decision behind that? Do you know about this?
Yeah, absolutely, and you're completely right. So we have no aspiration to be a D2C brand that are out there selling Seccl services. So I don't want to say, Vasyl, you can come and be a Seccl customer. I want to say, if you talk to this bank or this financial business or this fintech, ultimately they will end up using Seccl. And I think there's probably a couple of reasons for that. In terms of where are the problems felt in our industry, I think it's fair to say there are lots of people who are providing good client service. There are lots of people who really do understand their customers and are adding a lot of value. So we look at the financial advice space, we look at the fintech space, we don't say, oh, there's a big problem there. Actually, we see some people doing really good work. I think we then look at the infrastructure that supports those people and say that's where there's a problem. Because if all of those people can do the great work that they do and then not have to think about, and especially not have to pay for, a really complex, difficult back-end system, then we think ultimately retail customers see the benefit of that. So if you look at where we are today, we have 130,000 retail clients on our platform, something like that. So we want that to go up and up and up and up and up, but we want that to go up through those principal relationships. And realistically, if you're a retail investor in the UK market, it should be possible that your solution is powered by Seccl, but it should equally be the case that you never hear of us and you don't know who we are. Right? You know, that is, I guess, ultimately the business model, because we feel like that opportunity for disruption is in our infrastructural space. And actually, it's a sort of typical disruption play in that we think there are people in that value chain that either should play a significantly diminished role from what they do today or should not be in that value chain at all. Because, as I said at the top, this is all about connecting retail customers with the investment market. This isn't that hard. And if we can help an advice firm or a bank or a fintech run their own platform, then actually that's a whole company that doesn't need to exist, that doesn't need paying for. And of course, we have to remember that it is customers like you and me and my family that pay fees for all of these services. So if we can make that cheaper, there's more money in your pension, which has got to be a good thing.
So actually, to be successful with that kind of strategy, you definitely need to have like a very solid APIs. And from my experience, from like developing the API can be really challenging, and there can be a number of hurdles here. So what's your experience with architecting really great APIs? Easy to use? So what are the major challenges? What are the major things to address when you actually develop the API for third parties?
Yeah, it's a really interesting challenge because you're trying to think about how your API will get used. And if you approach it in the same way that you would design a UI, you realize you go wrong, because with a UI, you define the journey. You define actually how is someone going to interact with this, and therefore it's up to you. With an API, you don't get to define the journey. All you really get to do is define the parameters that you care about as a business in order to be able to drive whatever automation or whatever outcome it is. So we probably find that maybe the friction point between our volatility-based approach to engineering, the architecture, probably does manifest a little bit in that people are always quite functional in how they think of stuff. So they say, I want to have, I want to pay money in is a journey that I want to do. And like from an architectural point of view, we'd say, well, you know, maybe that's a transaction, and a transaction can be paying, it can be trading, and that sort of thing. So I think there is a requirement to sort of think through how an end customer in our context, like an engineer who works for one of our client firms, how are they going to approach solving this problem? And then you're trying to build an API which is open enough to handle different types of journey and kind of has a minimum around what it requires, but then equally is well documented enough that people can use it in anger. And I think that's probably the big learning we've got is, you know, how can we document this well? We've just rolled out a new version of our API documentation, which is a really good step forward. I think we're still looking at doing kind of a full open API and Swagger spec later this year, because we think that will just make it even easier to build against this, especially to do automated testing and that sort of thing. But the other big thing that we've learned is you will publish your API and then people will use it in ways that you weren't necessarily expecting. So no matter how you do it and what you do, okay, there's always potential that someone says, okay, I'm going to do it this way. And you think, oh, that wasn't what I thought. And it's not necessarily good or bad, because you should build it in a way that people can take it and use it as they want to. But it then makes you think, okay, well, do I need to change my documentation? How do I support this new journey? So I guess it's a bit like writing a great book, right? You put it out there in the wild and then people take it and run with it, and it's no longer yours once you publish it. And it's a bit like that with an API.
So look, I like the concept that actually with UI UX, yeah, you actually control the user journey, but with developing the APIs, you're not as much in control with the journey. So this is different perspective to architect this. And probably the companies who focused on all-in-one solution, it's easier for them to own this journey, the whole user experience. But you know, with the strategy that you have, you maybe can serve more clients through more end clients through your clients. And also maybe here comes some innovation when some of your clients can use your APIs in other way, other than you expected, other than you architected. So do you see like lots of innovation happening here when they start using the APIs in some other way than initially architected?
Yeah, definitely. And I think you're right. Part of the problem with, if you look at the industry where we exist, but you look at maybe how it was 5 years ago, so like pre-Seccl, the infrastructure and the platform piece is shaped in such a way that it kind of defines what the client solution has to be, because all it really is an automated workflow process for the paper-based process that went before it. So it says, okay, I used to do an application for a pension on a 6-page piece of paper, and now I do that on a 6-page online journey, and it has the same back-end processing. So I think that is inherently very hard to innovate around. And innovation in that context has been, we do this in a digital way, but we do this in a digital way, meaning it's kind of the same, but it's just on a screen instead of on a form. What we're seeing now is we're saying, okay, well, if I can say to you that you can offer retail clients, so normal investors, a technology solution that allows them to invest their money, that looks after their cash, but you can choose how you do that. You can choose where you put that in your journey. So you can choose the scale at which you do that. So are you going to do this by going to an employer and saying, I can offer all of this to all of my employees, but I can make it feel like an individual thing that's tailored to them? Are you going to say, actually, for this child's saving vehicle, I really want them to tie it to the outcomes their parents want, but the things that they actually care about as a child, and I want to have goal-based investing around that? If I'm going to go to a financial advice firm and say, actually, we think intergenerational planning, so the planning for the transfer of wealth between older generations and younger generations, is really the USP. Well, we can say, okay, well, that's great. You don't need to worry about any of the investment stuff and any of the cash management stuff. We will do all of that. But what you can do is you could take the money that you would have spent on having to get that stuff sorted, and instead you can spend that on a digital journey with your clients that wraps in loads of other services and that adds loads of value. And if you're, if I make up numbers, if you were going to spend £10 million on a change program 10 years ago, and you'd have had to spend half of that on getting the savings and investments bit done, well, what if we could say, actually, you take all of your budget and you spend that on building client proposition? What if I take away all of that cost base and just let you focus that on the outbound services to your clients? So that's definitely what we're seeing. And then we're also seeing innovation around things like reporting and management information, because again, we can build a reporting package and say, we think you want these dashboards, we think you want this output, but actually I could just give you, you can pull all the data through our API and you can build your own reporting. You know what your business cares about more than I do, and you know what your customers care about more than I do. So maybe if I just give you a good data orchestration service, then that gives you the power instead of being reliant on me. So that, there's a bunch of places we see that kind of innovation coming through.
So from the product management perspective, do you see like the roadmap is formed like by the request, with the request from the clients more, or with your own understanding what should be developed? So what is the balance between like these two major parts of the product roadmap, whether the clients tell you what to do or whether you tells client what they should have?
Yeah, it inevitably is a bit of both. We have a very strong basis of knowledge within our business from our industry. We've hired lots of people who are experts at what they do, but we also know that we're trying to build an industry changing tool that does things differently. So if we go out and we build exactly the same thing that our competitors have done, and it is slightly cheaper, that does not disrupt our industry, right? And we could do that. But instead, what we're trying to do is we're trying to solve the problems our competitors have solved, but in a way which really challenges how the industry works. So we do talk to clients a lot, but we like to try and have those conversations couched in problems and not solutions, because what we don't want is to say, okay, you need this particular tool. We will go and build this tool exactly like it was over here, and it will do what you do today. Because really, we think for a lot of the stuff that's in our industry, it's not working that well at the moment. So instead, we like to say, okay, well, what problem are you trying to solve? I'm trying to solve aspects around how my clients manage their cash between different accounts. Well, okay, well, we could build an internal transfer, and maybe we'll do that to start off with. But actually, should we really be exploring open banking solutions? And should we really be exploring integrated cash management solutions? And is there a way where we could do things differently? And as a result of that kind of thinking, we rolled out faster payments integration for money in, a good few years ago, where every other, infrastructure provider was like, I'll send us a check or do a backs payment. It'll take 3 to 5 days. And we're like, well, it takes 4 or 5 seconds and it's in your account. So we're really trying to challenge that. So the customer voice for us is really important, but it's important especially to understand their problems. And then where the product team really have to take that is they have to say, okay, well, if you're going to solve these problems, what does amazing look like in our industry? And it doesn't have to be in the investment space. So we look to banking, we look to e-commerce, we look to payment platforms. We say, okay, well, what does amazing look like for AML? If you're going to go there, like how do I really get comfortable that this retail investor is who they say they are? And what is better than, oh, they sent me in this piece of paper and I put that in a filing cabinet, and that's fine. So that's really where some of that challenge comes internally.
So back to your first steps as CTO in Seccl. So I have observed that there is some difference when you start new company as a founder and a CTO founder, yeah? And when you join already existing company, which is pretty established, have product, they have team, and you need to step in and become the leader here and be in charge and continue everything that they have. So what would be the ideal first steps for the CTO when he joins new company? And what were your first steps as CTO in Seccl?
Yeah, you're right. It's very different. And having, I suppose, founded a fintech in my last role and then joined a fintech that was established in this role, I can definitely see that difference. I think when you're joining an established business, the most important thing, or the thing that I really tried to focus in on, was listening and trying to understand what's happening, because I think it can be tempting to show up with a very prearranged or predetermined view as to what the right answer is. And that can be done with the best of intentions, but it can be like, oh, well, I solved problem X in this last business by doing this thing, and therefore I shall do it the same here. And what you realize is you've got a whole different group of people who operate in a different way, who have different shared experiences. So for me, probably the first couple of months was mainly just listening, talking to people, trying to understand the problems. It's not a case of judging and assessing. It's much more a case of just trying to understand, okay, this is where we are today, and doing that proper agile thing of understand where we are and then figure out what the smallest step forward we can take to get to a better place is, and then doing that again and again. So I guess I've been here 6 months now, and I think most of that, if you assume the first half of that, was largely listening and making a few critical decisions because they were timely and because they were needed. Now I've spent the last few months getting the team shape and structure in the right place, because as a leader in a business, and certainly for me with that team, I've got a pretty simple job, right? Get the right people doing the right thing in the right way. If I can do that, and then it's golden, right? Because I've got amazing people, and if they're doing the right thing in the right way, it's all sorted. So yeah, most recently it's been get the team shape and structure right. Have we got the right people in the right teams? Are the teams focused on the right work? Do they feel they have the right level of autonomy over things? That's kind of what my second 3 months has been. Now I think the job becomes different again, because it's about bedding in a really strong performance culture and really understanding what success looks like. And it's also about spending more time talking to good people like yourself about the work that we're doing and going out and sharing what we do, because we've been the investments industry's best kept secret in terms of what we're after. But actually now my job becomes sharing that with others. And a big part of that is around talent and hiring and making sure that amazing engineers and product people want to come and work with us and that they know what they're going to get. And that then becomes an ongoing thing. So that's probably how I've seen the first 6 months.
Okay, so the first step was like listening, understanding what's going on, understanding the situation, and then the next was to restructure the team. And here is my question. So what was, and you mentioned that you had to do some very important and timely decisions during these 6 months. So speaking about this changes, organizational changes specifically. So what was the specific organizational changes that you think will positively influence Seccl growth going forward?
So the key, if we look at the key reason for the changes, which is probably the biggest thing, that is to make sure that at every level we have a cross-functional understanding between product and engineering, because I think where things can go wrong is if, we have a product team who are doing good work in isolation and an engineering team who are doing good work in isolation, and there is a disconnect between them. So that is the principal thing I'm trying to solve for. Now, we had a varied team shape and structure, a few months ago, and that's probably what we've looked at. So now we have pretty clear units of people. So we have tribes, as we call them, which is our custody tribe. So they're focused on all of the trading, settlement, payments, all of that kind of stuff. We have the investments and advice tribe, who are largely focused on the services that our financial advice clients and advisors would care about. And then we have the accounts tribe, who really work on the things that retail customers would care about. So pensions and ISAs and that sort of thing. So firstly, it's formalizing those tribes and then creating a new tribe, which is the technical tribe, which owns platform resiliency, scalability, projects like authentication and those kind of things. And then within that, making sure that we match off product and engineering resources at every level. So each squad, so the tribes have squads within them, each squad has engineers and quality assurance and a product owner. And then each tribe has an engineering manager and a lead product manager who's accountable for that tribe's mission and vision and the performance that sits within that tribe. And then within the structure, we have engineering and products. We have a head of engineering and a head of product. And the roadmap splits down at squad level, tribe level, global level. So it was getting that structure in. We've also created the data function, which sits as a horizontal to that and in addition to that, really. So that's where we've got a head of data who's responsible for building out the internal data proposition and the commercialization of the data proposition over the longer term. So it's getting those pieces right, as I say, with a view that every unit is able to make the decisions it needs to make because it has the right people in the room at the time. And every decision that can't be made within a group is escalated up through the right avenues to the point where, if needed, I can then arbitrate on the decision. Because I think this, people talk a lot about high functioning teams and what good looks like. And I think that really the bit that comes through time and time again is delegated decision making, but actually making decisions. There's a really important thing there, right? It's not delegated discussion, it's delegated decision. And that is, again, something we're trying to solve for in this structure change.
Yeah, I really like this structure. So I have seen similar structures with fintechs. And while doing this restructuring, to me, it's very important and actually to communicate correctly, communicate to all the team members why you are doing this and what you want to achieve with that. And my question is, so did you have any resistance while doing that? If yes, so how were we able to overcome this maybe possible resistance or maybe possible misunderstanding or miscommunication? So how to overcome this, so not to frustrate the team members, because you're doing this for good, for sure, but you need to communicate this efficiently to team members. So how we're able to do this?
Yeah, I think it's a great question. And I think that part of the reason that listening phase was so important is that I think without that, you run the risk of definitely people feeling like they've not been brought in, that they've not been part of that change. Certainly with this particular change, in addition to generally sourcing opinions and views from everyone in the teams, I spent a lot of time over the past month with the technology leadership group, which is those engineering managers, those lead product managers, the heads of each department. And really the purpose there was to make sure that they've all obviously got lots of experience from different places that they've worked at, and is to make sure that they have had the opportunity to feed in, to challenge. And certainly we went through a few iterations of things as a result of that. But I think got to a really good place because, ultimately, you're right. I'm making these changes and doing it for good reason. And that is why we're doing it. But, it shouldn't feel like it's completely imposed. It should feel like you've been part of solving for that. And I think just being well socialized and having good conversations around it is the way that you get to that point. And even if you get to that point and people don't necessarily agree, I think they can understand the rationale. And I think that's consistent with all changes I've done in the past as well. It's like your objective isn't to get everyone to agree that this is the right answer. Your objective is to get everybody to be part of the conversation, to have had their voices heard, to understand the rationale behind it, and to know why this is what's happening. And I think if you can do that, then you're probably winning as far as these things go.
So another thing that we have observed when you join new company is and when you join the established business, so is actually a level of technical debt, because you already have the product, you already have the technology, and with every successful technology on the market goes some level of legacy and technical debt. And so how would you identify what are the major challenges related to the technical debt? How would you define the re-engineering strategy? So can you tell us what's your approach here?
Yeah, absolutely. I think it's a really important thing. And going back to this concept, why do we call it technical debt? The important thing is it is a debt that carries interest on the work that we do, but it's not to say that it's all bad, right? Because if you want to buy a house, you probably take out a debt with a bank, and you don't think it's awful. I'll never take out a debt with a bank because I couldn't possibly do it. You say, okay, well, this is a debt that I will live with because I'm comfortable with the trade-off. And I don't think it's that different with the technical debt. The objective isn't to completely remove all technical debt, because that's unrealistic. The objective is to remove the high interest debt, which makes your life difficult, which makes your software painful to work with, or makes it insecure, or whatever those aspects might be. So I think the worst thing you can do is say, here's a huge list of everything and I must solve it all. Really, what you should be doing is setting a framework around technical debt decision making that says, okay, effectively, can I value score technical debt? Is it a security issue? Is it a scalability issue? Is it a developer experience issue? Does it slow us down? And suddenly you start to understand that in your list of 100 technical debt things that everyone has, 10 of those are critical, because they really do make a huge difference through whatever their value score is. And some of them aren't. And then once you've got that understanding, you can say, okay, well, if we're a serious software business, we have to pay down our debts. There is no option where we don't spend time on technical debt. That's not the right answer. So we need to time box it, and we need to say, okay, well, let's assume that we're going to spend 20% of our time working on tech debt. And let's assume that we've got a well-prioritized tech debt backlog, because we understand really where the pain point is that comes from that. That's what gets elevated up in that 20%. And that, I think, is certainly how we've approached it, and what I think a good approach to it is, because then, just like feature work, you're saying, I want to prioritize based on value and impact, because I know I can't do everything, but if I do the highest value and impact stuff first, then I can always feel good about the day's work I've done. So that, I think, is a challenge, and I don't think it's any different with tech debt. But it does require some thought and consideration around it, and some organizing as well, because the tech debt often is owned across multiple squads and tribes, and it's not necessarily just that a person can do it.
So I have seen several different strategies dealing with technical debt, and they are ultimately different. So the one will be actually to rebuild everything from scratch, every 5, 6, maybe 7 years, depending what kind of technology you have. So the other will be decoupling and having this gradual decoupling strategy, as you may describe here. And the third one will be like, hey, just let's keep developing new features. Don't do anything with technical debt. So let's just earn money and not spend resources on dealing with the technical debt. So let's just develop the new functionality and maybe do everything correct in the first place. So do you think, and also many people say that, hey, we need to gradually decouple because here you don't need to invest in rebuilding from scratch, but you also need to deal with technical debt. Do you think the other two concepts, like to rebuild the whole system from scratch every several years, and and not spending money for actually dealing with technical debt, but just speed up with the feature development, are they sustainable? Are they sustainable strategies or not? What do you think?
I think not, and I think for a couple of reasons. So rebuilding your whole system from scratch effectively, or cycling it through like it's the cells in your body and they get replaced every 7 years or whatever it is, like that speaks to me of an architecture and a system which is not fundamentally built for purpose. We talked about this volatility-based decomposition, and I guess how a typical system's architected. They might be functional, so you might have, I don't know, a buy stocks module, a sell stocks module, or they might be domains. So you might have buying and trading and that sort of thing. But inherently, what happens there is you get a lot of repetition of work. You get a lot of repetition of code. You get a lot of functional elements and systems. And they can become so unwieldy that when you then have to change stuff, there's too much interdependency, there's too much interrelationship. And that's when you typically have to rebuild the whole system from scratch. Because what you're really saying is, I can't change this one thing without having to change all of these other things, right? You're not saying my whole system is broken. You're saying that my whole system is too expensive to change. So when we look at the volatility-based decomposition, the way some people describe it is, it's like if you had 10 safes in a room and you had a grenade and you put a grenade in a safe, it's going to blow up in that safe, but there's going to be 9 safes that are not touched, right? So we really, by us trying to contain stuff, that helps us. So I don't think the rebuild thing works, because the rebuild thing says it's broken and your architecture doesn't work. It also says that you'll have the same problem in 5 years because you'll rebuild it in an architecture which is not suitable and doesn't accept change. Then the other side, which is to not spend money on stuff, not spend resources on stuff, or to just be like a feature factory that doesn't pay down its debt. It's just short-termist. Like, yeah, you might get away with it for a few years, and there are many successful software businesses who have taken that approach, but all of them at some point hit a point of scale where they are then unable to cope with change. And I think, they need either fundamental reinvestment and re-architecting, and I'd probably point to someone like Microsoft over the past 10 years as a firm that has fundamentally changed the way that it operates in order to get to a better place around this stuff. Or you will get to the point where you just grind to a halt, and then you will be disintermediated or disrupted by someone who is able to move quicker than you. And yeah, so I don't think either of those things work. I think the only way you can really do it is by having a strategy and putting a meaningful amount of resource into it. So my kind of guideline that I use internally, at least, is that we should probably spend 20% of our time on tech debt. Feels like that's roughly the right amount.
So, okay, so here comes another challenge. So you need to address this on the leadership, on the C level, that you actually need to spend resources for dealing with the technical debt. And from the business perspective, in many cases, non-technical executives, they see this like, why should we spend resources here and now to fight with the technical debt, and if it's something long term, so if it's not affecting us in short term. So how can a chief technology officer actually address to the C-level, on the C-level and stakeholders level, that you actually has to put these resources into gradually improve your system with upgrading the technology and spending these resources not only for feature development, but also for upgrading the system and fighting the technical debt. So how can you address this efficiently on the C-level?
Yeah, I think it's the challenge you've got is actually whether the C-level at your business really understands technology and engineering and how that works. And I'm, very, very fortuitous and very lucky with Seccl. The exec do really understand technology, and we are a technology business. So we don't have the conversation that says, should we or shouldn't we do this? In the same way that we also really understand financial crime and client money, and because of that, we don't have the conversation that says, do we care about financial crime or do we care about information security? Because it just is okay. But, my background, historically, I was a consultant and I worked for lots of different financial services firms. And the level of understanding of technology at board level and at sort of exec level was very, very varied. So you're right, you will sometimes get, why should we do this thing? Because we can live without it, or we won't need it for the next 3 years. And some of that is actually driven by the reality of the business. Like if you're in a business that's going to get sold in 2 years' time, you have a very different view on what you would invest your time and money on versus a business that's going to have, the same owners for the next 20 years and is building out, like we're building out a long-term vision to change the investments industry. We're not optimizing for 6 months' time. If you're selling your business in 12 months' time, you're definitely optimizing for the next 6 months. So I think there's a little bit of the organizational construct that makes it hard. My advice, I guess, if you're a CTO and you're trying to land this message with a board and you're struggling, is to try to contextualize it against the impact. What I think often as technologists where we can go wrong is we spend a lot of time talking about what we need to do and not why we need to do it, and what the real world impact of not doing something is. So it's like information security is a great example that is probably much better understood now than it was 10 years ago. But 10 years ago, if you wanted to focus on information security and data protection, you would really have to tell the why story behind that. And I feel like it's the same with technical debt. I think if you're able to say, look, if we don't fix this stuff, then in 2 years' time, your wage bill will be 50% less effective than it is today, because all of your engineers will be working slower and it will be harder going and we won't have been on top of stuff. That becomes quite a compelling argument if you're the chief financial officer or whatever.
So it looks like this re-engineering strategies heavily depends on the on whether you have like short-term or long-term business development strategy. So if you have like short-term goals and you need to achieve like short-term goals, so then you would probably not spend in resources into technical debt. If you have this long-term vision, long-term strategy, and then you would actually gradually invest into fighting the technical debt and upgrading your technology.
Yeah, I think that's it. If you are short-term in your outlook, then it's quite hard to make an argument that you should invest for the long term. And if you're buying a business, that's then obviously the red flag, is to try and figure out whether people are actually investing properly or if they've just done what they have to get it to sale.
Yes. Okay. Adam, you are on the board of several educational organizations. So the one is University of the West of England, and the other is RedStart Educate. And can you tell us why actually you do this?
Yeah, sure. So financial education, so the two slightly different organizations. So with RedStart, that is a charity based on financial education, which works with primary school children to try and improve the outcomes of primary school kids from lower socio-economic backgrounds. And UE, which is the university, I'm on the advisory board for the accountancy department there. And I guess both stem from the fact that I think you should be able to gain a really strong understanding of finances and the impact that they have, especially through childhood. And I certainly was never really that well informed on financial matters and products. And I think it wasn't until I worked in the industry that I really understood it. And I thought, well, that was too little, too late. And as someone who grew up without a huge amount of money, it was quite stark to realize that, if you don't get that education, you won't have good outcomes. So for me, financial education, and I don't mean becoming an investment expert, I mean, like, how do I save? How do I budget? How do I spend my money? Should I have a pension? That base level, frankly, it should be part of the school curriculum, and it's not. So therefore, I work with organizations who are going to try and support that. And then with the university, it's similar, but it's more a case of saying, well, actually, how can we get the right talent into fintech, and how can we provide good learning and education routes for people who are graduating and coming out of university? We've got a talent deficit in the sector, and we're really keen to make sure that we have good people coming in and helping to make that better.
So this is very appealing to me because my company, we insert, so we're consultants, and we help fintech companies to develop software solutions, and we also educate our engineers in financial literacy. And frankly speaking, I think this is very important, to have this mission of helping people and organizations to improve their financial health. And actually, this is what we do in fintech. I think this should be a mission for maybe all the companies, ultimately all the companies in the fintech space. Not to forget that why we do this, because we actually want to improve this financial health and of companies and individuals.
Yeah, completely agreed. It's completely aligned with how firms in our space should think, and it's very aligned. I always remember when we founded RedStart, and it grew out of the investment consultancy where I used to work. And the person who founded it said, I'm an investment professional. I am much better at giving financial advice than I am at painting a hospital or whatever else community initiative I could do. So why don't I give my expertise? And I think, you're right. We work in finance and technology. Let's use that as what we teach and what we share with people. And it's the same with engineering as well. Like, even if you aren't an expert in finance, can you go to a coding academy? Can you help get people into career routes that then support them in the future? So yeah, I agree. It's a really fundamental part of who we as an industry are, and something where we should be better at it. So I'm glad to be part of it, and I know others are as well.
Yeah, totally agrees. So I think everyone in the world should have at least some, basic level of financial education, just for their own personal good, not just being like a financial advisor, but understanding the basic concepts.
Yeah, absolutely.
Okay, Adam. So looking forward. Everyone are saying that the kind of recession we have here in the United States, in UK, Europe, and probably this will continue for a while. So what does it mean for yourself at the moment, for Seccl actually? So what are the major challenge that you need to overcome during this year?
I think for us as a business, we're probably less impacted by the sort of global mega trend. Obviously, our client base are impacted, and it impacts the stock market. So we are downstream of that. So that's obviously a big deal. But equally, I think for us, our real focus is just to keep on with the work of building the next generation of platform, and to get to the point where I think, in 12 months' time, if we're sat here and talking, we've got a platform which is head and shoulders above anything else in market. We've onboarded really key clients as part of that journey. And then that gives us a platform for further growth and support. I suppose the other side of it is, in the UK market, we have a thing called Consumer Duty, which is the FCA's new regulation around supporting and protecting consumers and giving them good outcomes. And we feel like that's hugely important and aligned with what we do as a business. But I think especially at times of economic stress and the cost of living crisis and recession, actually this idea of safeguarding customers and making sure that they are well looked after becomes even more important. So as much as we can be an enabler for that, I think we want to focus on making sure that our end clients are well protected through this period.
All right. Okay, Adam. So thank you very much. It was really a pleasure to talk with you, and I wish you and I wish Seccl to continue improving the infrastructure and to allow fintechs, allow your clients to innovate and bring really great user experience and client experience to the end clients. So thank you for joining us today.
Thank you. It's been great fun.
Yeah, thank you. And for everyone who are watching us, so please put your comments below. So maybe you have some questions. So we will also put all the links to Seccl. So maybe you can explore the Seccl APIs yourself, and this will be useful for your company. So thank you for watching this video. So please subscribe to our YouTube channel to keep up with the fintech, and like this video. And thank you, everyone, and bye-bye.
Still watching us and have not subscribed yet? Let's fix this. Also, don't forget to like this video and take a look at the other episodes we have. See ya!